So morning again. So it's everyone here for technical analysis. This is here for the first time. Who was here yesterday? So first time. You never attended. You didn't attend the Friday. So, who's using MetaTrader? Everyone. So, I'm gonna do with you guys technical analysis, strictly focusing on indicators. That's what I'm going to be doing. The indicators that I'm likely gonna cover would be the Bollinger Bands, the RSI. So it would be those two primary ones, and then if we still have more time, then I'll cover the other. So my focus is not on doing lessons on multiple amounts of indicators. My primary focus is on the understanding. Then you actually use it. Right, so that is my main focus. My main focus is strictly on that. You understanding how it works, as opposed to just having all the different indicators, but at the end of the day, you don't know how to use it in order for you to become profitable. Because at the end of the day, we are not looking for a massive amount of knowledge. We just need something that we understand how it works so that we can make profits. Unless someone doesn't want to make profit, right? So I'm gonna start first with the RSI indicator, and then I'll show you how to put it in on the MetaTrader system. And I'm also going to show you how to use it in analysis, right? So I'm much more practical as opposed to just theoretical, but this is meant to be a theoretical class. So I tend to bend the rules here and there, right? So all indicators in a market are important for one reason and one reason only. They give us information about numbers that we do not see, right? So we have a disagreement of both buyers and sellers in the market. But now, how can I best be in a position to interpret the actual disagreement which is there in the market? That is where the indicator comes in and analyze numbers, because say for example, ShopRite is gonna fire 50,000 employees. Is it a good thing or a bad thing? Both.
For me, as a trader, for me, it's an investor. I need to take advantage of it, but as an ordinary citizen,
It's bad. So it's both, depending on which side you're arguing. Is it good or it's bad? Both. Bad.
Are you talking with regards to like share price?
With regards to how you feel about the statement, ShopRite is firing 50,000 people, but now from a trading's perspective, is it good or bad? Could be both. Could be bad.
I think it's both.
Both.
Yeah, from a trader's perspective, going down, it's good.
So from what I gather, you said the majority have said both, right? So if the majority said both, how would we expect the share price of ShopRite to move? If you're going to be analyzing the company itself, you're already interpreting the fundamental as both. It can be good, it can be bad, right? So that means the market won't move.
That's why it depends. As a trader, it's good news because whether it goes up or down, you can place a trade. But I'm saying from social aspect of things,
Yeah.
But as a trader,
It's
Because you
okay.
can take advantage of all this.
It's good for you. Okay. 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 So that is fundamental analysis, right? That is fundamental analysis. So because in fundamental analysis, you can have different sets of opinions. In the market, you having an opinion doesn't really matter. What matters in the market, or the most important thing that matters in the market, is the person that has the money to back up their own opinion is the one that is basically going to determine what the direction is. And obviously, if the share price comes down, we would interpret the news as bad news. And if the share price goes up, we would interpret the news as good news. Right? Yeah. If the share price goes up, good news. If the share price comes down, bad news. But I just gave a statement. They are firing 50,000 jobs. I never said whether it's a good thing or whether it's a bad thing. So it is he who has the gold in the market that makes the rules. So when we are using indicators, we are interpreting now the numbers. Does the person that has more money in the market actually selling on the basis of the news, or are they buying on the basis? Which part or which side are they taking? You don't make an assumption, meaning my opinion doesn't really matter, right? So indicators help us to analyze those numbers, because the person that has more money is obviously going to be buying a lot of shares or selling a lot of shares in order for the share price to take either one of the directions. So now, with the RSI indicator, we are going to be looking at those numbers, right? The numbers that are going to be telling us whether in the market we are buying or whether we are selling. Do not go against what is happening, right? But before I get to the indicators, one thing I can tell you is that all indicators work the same. There's no indicator which works completely different, because all indicators are analyzing the same numbers. Do you follow on that part? Yeah. So I don't have to teach you 10 different indicators. I can teach you one. If you understand how to use that one, you'll understand how to teach yourself another one. Right? So in analysis, we have two sets of analysis: fundamental analysis as well as technical analysis. The fundamental analysis part is the statement 50,000 jobs. Technical analysis, on the other hand, we are looking at price and the response of the market towards the news which are there. That is technical analysis. But what is interesting about technical analysis is the fact that there are only three sets of directions that the market can take, right? Which are up, down, and sideways. So the market can take three different directions. So my question is, why is it that people are still losing in the market if we only have three sets of directions? Why do we still lose? Huh? Failure to analyze properly. Yeah, it's technically failure to analyze properly, because a lot of people's mistakes in technical analysis is using the past to try and forecast what the future is going to bring, right? But that is technically wrong, to use the past. But in theory, it's actually right. But practically, it's wrong, right? You seem confused.
No, I'm not confused. It's just that we've been told that the market remembers where it's been before. That is the history, that is the past.
The market remembers. Yes, you can only remember where you've been before because you've been there. But the question that will come is, if you went somewhere before and you changed direction from that point, now that I'm there and I'm remembering that I'm there, am I still going to change direction when I get there? Or is it a different circumstance now that I'm there? Right? That's where the tricky part comes in, where now I would end up putting myself in a position where I'm placing a trade with the assumption that that which has happened before the last time we were there is going to take place. But that is a completely wrong assumption in the market. The market, whatever is happening, we take it as is, that this is what's currently happening now. Even though it matches with what has happened in the past, it does not mean that whatever is happening now is the past. It's not the past, it's the present, right? So a trend has three factors in it. I'll make an example with you. Do you wear your shoes without socks sometimes? Yes. Let's say this. So these ones you never wear without socks. So I would say it's a trend that every time you wear these shoes, you wear socks. Is it the right assumption? So it's a trend. So that means if I was to analyze you wearing these shoes, I need to take into consideration the fact that there are socks involved, right? So now with the three trends as well, right? It's a trend because every time she wears these shoes, she repeats the same day, right? Meaning in an upward, in a downward, or in a sideways trend, it can only be called a trend because we are repeating the same thing over and over again. But now a lot of people never take into consideration exactly what is being repeated so that you can avoid entering into the trade early, and you can also avoid entering into the trade late. Do you understand? Because if you enter early, that means that she hasn't worn shoes, but she has worn socks. And you're already in a trade, anticipating whether she's going to wear shoes or not. You entered early. If you wait for her to wear shoes after socks and walk out of the door, you are already late. You should have entered the moment she wore shoes, because that was showing you that now she's completing the trend, right? So we have two things inside a trend, or three things inside a trend. So three trends, three factors inside a trend that basically creates a trend: support, resistance, and retracement. Right? Those three things: support, resistance, and retracement. Now, what is support? Support is an area at lower prices where there's a possibility of a change in direction. I'm signaling the word possibility because we may not. Right? So it's an area at lower prices where there's a possibility of a change in direction. Resistance, on the other hand, is an area at higher prices where there's a possibility of a change in direction. Now, when I say an area, that means I'm talking about a range of prices. It's not a specific price. That's another assumption that a lot of people do. And that's why you would see people, when they have their chart, their analysis, they always draw lines, right? And say this particular line here is a point of support. That is actually wrong. That line there is highlighting to you the area that there's a possibility that if we come here, we may change direction. We may not. But that specific price is just there to give you a hint of the area. It's not saying that that specific price is actually support or resistance. So those are the two factors. The last one would be a retracement. Now, a retracement is a profit-taking scenario on the basis of the action that you have took. So if you are a seller and you want to make a profit, you have to be a buyer. That would be a retracement, an action against the initial action that you took. If you are a buyer, a retracement would be you selling. Do you follow so far? So what makes an uptrend an uptrend? It would be support, which is lower prices, and then price starts to go up. When price hits a specific area, say assuming resistance, this would only be resistance the moment selling action starts to take place. Now we start to take a profit from us buying at a cheaper price. And then once we start selling, price starts to do this. This movement here is what we call a retracement. That move there. Now, because this move here is known as a retracement, it's the repetition of these 1, 2, and this retracement movement that creates a trend. Do you understand? Do you understand? Or is there a question? Is there a question?
Can you please go through it again?
What makes an upward trend an upward trend? Right? You have a point of support, which is a cheaper price. And then you start buying from there. So in this case, let's say 1 rand. Share of a company is trading at 1 rand. And it's at 1 rand, I decide to start buying. Right? I buy. When I buy from there, the share price starts to rise. When it rises, when it reaches the price of 7 rand, I decide, okay, I'm going to start selling a portion of the shares that I bought at 1 rand. I'm not selling everything. I'm just selling a portion. When I sell the portion, the price moves from 7 rand, it starts to come down. 6 rand, 5 rand, 4 rand. When it hits 3 rand, I start buying again at a cheaper price. But now I'm buying higher than my initial position, which was 1 rand. Do you follow? Do you follow? So when I buy at that position, that means it's a retracement. And then when I start buying again, the movement starts there. I'm starting the trend, support, resistance, retracement again. It goes higher now. When it reaches a specific level, I sell again a portion of the quantities overall that I have purchased. And then another retracement comes in. Now, usually, a retracement is a 50 or 60% movement of the initial, from the point of me buying to the point of me selling. I would usually sell to an extent of half of the distance of pricing between support and resistance. That would be a retracement. And that's what creates an upward trend. Now, the indicator is going to be showing you numbers on the basis of support, resistance, and retracement. All of them. Do you follow on that part? Do you follow on that part? Okay. Yes. Yes.
I follow the support resistance, then it goes up. But are there cases where it hits the resistance area a number of times before it breaks out?
It can. The reason for that is there are 2 kinds of retracement. Remember, retracement, I said it's a profit-taking scenario. Now, within that profit-taking scenario, it can be movement against the initial, or it can be a sideways move, whereby I'm selling within a range as opposed to sell quantities up until price reaches a specific lower price and then I start buying again. But I'll show you from an indicator. Right? So this is an upward trend that we call an upward trend and how it comes about. A downward trend is the same picture in the opposite direction, where the action that we take is from a higher price and we are sellers. So we sell at a specific price and price comes down. The only way for me to make a profit out of this trade is for me to become a buyer at a cheaper price, where if I become a buyer, which is profit taking, the movement or retracement will start going up. So this would be a retracement. When it hits a specific level, half of the distance, 50 or 60% of the initial distance, I decide to continue selling. And when I sell, it comes down even lower. I repeat the same thing. Right? So in a market, what we are basically doing is we are trading the repetition of what we are doing. But now you need to trade it very carefully. For example, let's say that we are moving from resistance, we are coming down. Would you sell somewhere in here? Let me ask. Would you sell somewhere in there?
Oh, no.
No, why not?
Because you are not sure if it's going to go away.
You're not sure. Okay. It could retrace from there, right? Exactly. Because it's already moving and it has never given you support and a retracement, it's going to be a big problem for you. So you can only start selling once you know that I have a resistance, I have a support, and I had a retracement from the previous movement. Meaning the movement that is going to come next is going to produce resistance, support, and retracement. That is the move that you trade. Do you follow? That is the movement that you trade. So from there, and then we have now a sideways move. A sideways move of price is technically correct with it's an accumulation move, where the market accumulates funds first before it can decide whether it's going bullish or bearish, right? And if you can look at this movement here, this movement does not have a retracement, right? Right? From support, we buy. When we get to a point of resistance where we say it's resistance, we sell everything. And then price goes back where it started before. That's what generates a sideways movement. So technically, this is not a trend at all. This is mainly an accumulation of capital in the market before the market can start trending. So in actual fact, we only have two trends, an upward and a downward. This is not trend at all. So in the markets, or when we are making use of indicators, we want the indicator to identify for me whether we are still in an accumulation phase, whether we are trending down, we are sellers, or whether we are trending up, we become buyers in that particular instance. So the relative strength index, RSI, is the name of the indicator. Relative strength index, aka RSI. The RSI indicator now analyzes numbers in terms of support, resistance, and retracement of the trend itself. So, because it sees numbers that we do not see, like how many contracts just came into the market buying, how many contracts just came in the market selling, and are those contracts still creating, or are they creating a trend or not creating a trend? That is what we want to know from the indicator itself. Now, the indicator is or has two specific areas. One area at the top is a 70% area, and the other one is a 30% area at the bottom. From 70 going higher, that's where from the indicator would interpret that level there as overbought. From 30 coming down, that is where we would interpret the area as oversold, right? Now, overbought and oversold, what's the first thing that comes in your head when you hear the words overbought and oversold? Overbought, we're ready to sell. And then oversold, ready to buy. Who disagrees? Who disagrees? Overbought, we are getting ready to sell. Oversold, we are getting ready to buy.
Isn't it overbought where most of the people are actually getting out of the trade because the price shares reach that capacity? Oversold, big people are starting to buy into the market.
Yeah, what she said. Yeah. Sell, overbought, buy, oversold. Okay, that's wrong. Right? That's wrong. In the market, overbought and oversold don't mean what you think they mean. Right? In the market, remember we are dealing with trends. So in the market, overbought technically means that the market is actually buying this share or buying the asset. When it hits oversold, it's telling you that the market is actually selling. You must never think of buying when it hits oversold. Think of selling when it hits oversold. When it's hitting overbought, don't think of selling, think of buy. Do you fold? Do you fold? Meaning, overbought in the market is a point of resistance, where from that resistance, we need to start selling for a retracement. Remember, a retracement can either be sideways or movement against. You can either start selling for a retracement up until a certain level and then we buy again. But now remember, for you to trade the trend, you need to see a point of support, you need to see a point of resistance, you need to see a retracement, and then you engage on the next part, on the next wave. Do you fold on that part? So, this very same indicator again, the share cannot be overbought or it cannot be oversold without us knowing exactly where did buying starting or where did the sell side start, right? So there's a 50-point line in the middle of the indicator. Usually theory recognizes the area or this whole area between 30 and 70 as the neutral zone, right? But that neutral zone, that's where everything starts. So the market doesn't start from oversold to overbought or from overbought to oversold. That would be the interpretation that we gave overbought and oversold. Instead, sometimes we go overbought and end somewhere. Now, the 50 line separates the buying section, which is above 50, and then the sell side, which is below 50. So 50 separates inside the neutral zone, buying neutral zone, and selling neutral zone. That is 50. Right? Meaning anywhere above 50 is buy. Anywhere below 50 is sell. But we are not done. There are two manipulation zones within the very same indicator. One is 60, one is 40. 60 and 40 are manipulation zones. Well, I call them manipulation zones because sometimes if the indicator goes below 50, because I said it's the sell neutral zone, you would assume that you need to start selling from there, right? But sometimes the market goes below 50, but they are still buying. They are just going below 50 to convince you that now that we are in the sell neutral zone, I'm supposed to be engaging in a sell, but that is actually wrong. You're not engaging in a sell, you're supposed to be a buy. You can only start becoming a seller once we go below 40. That's when you can start being a seller. Once we go above 60, that's when you can start becoming a buyer. But whilst we're still between 50 and 60 or 50 and 40, that's still manipulation. That manipulation is going to attract traders to go in the wrong direction as opposed to the right one. Any questions?
So if it goes below 40 or over 60, it's not supposed to.
No, if it goes below 40, it's actually the real thing. They are selling. If it goes above 60, it's the real thing. They are buying. But if it's still below 60 or above 40, you don't have any confirmation of what they are doing. There's no interest in either buying or selling. But it is going to attract a lot of traders to go then in the wrong direction, whilst it's still around that very same place. So it's a place where we need to be aware of, because if we're not aware of it, we are likely going to engage in the market. And you're not going to engage in the right direction. Instead, you're likely going to engage in the wrong direction. Right? So, from this diagram here, I'm going to do a buying signal. How do we spot a buying signal? And from spotting a buying signal, how would a bullish or an upward trend develop from the buying signal? So what would happen would be, point number one of the indicator would be oversold. That would be point number one of the indicator. Point number two, the indicator will move from oversold to being overbought. Right? The moment this indicator hits overbought, this is a prepare yourself to buy signal. It's not saying buy, it's just saying prepare yourself for a buy. Because at this current stage, all that we have is support, we have resistance, we are still left with the retracement. Agree? We are still left with the retracement before we can engage. Now, because we went overboard, your retracement for you to enter into this prepare buy signal is either going to be 50 or 40. That is going to be point number 3 of your indicator. When it hits 50 or 40, that is where the new support is going to be established. You enter around these areas for a buy. So if I was to draw a line, doesn't this picture look like the picture that I drew before? It's the same, right? So this is the beginning of how a trend is created. Now, the moment point number 3 is reached, it's telling you that a retracement is done. Only if the indicator does not go below 40. The indicator needs to remain above 40. Then we are buy. So long as there's an upward trend, the indicator will be moving between 40 going back to 70, 40 going back to 70, or 50 going back to 70, 50 going back to 70. That's a bullish or an upward trend when you are using an indicator, RSI. Any questions? No question. Do you understand? Do you understand? Okay. Let's go to the sell signal. Sell signal. Now with the sell signal, point number 1 is going to be there, overbought. Point number 2, prepare yourself for a sell. We are oversold. From there, point number 3 is going to be either 50 or 60. That's point number 3. This is the area where we enter for a sell, because we have support, resistance there, we have support there, we have a retracement there, and then we start selling. Now, so long as the bearish movement still remains, the indicator will move from 50 or 60 where you are entering back to date. 50 or 60 where you'll be entering back to date, for as long as the bearish trend is still happening. That is what's going to happen. But the moment the indicator can go above 60 in a bearish movement, now you need to practice caution, because above 60, that is where buying interest is. You do not want to continue selling once the indicator goes above 60. Do you follow on that path? Okay, we continue. Sideways movement. In a sideways movement, because we do not have a retracement, instead we sell everything up until the beginning. The indicator moves like this. The indicator neither goes overbought nor oversold. But it does generate buying interest. When it comes back, it generates selling interest. That is where now the accumulation of funds is. Are you fine on that part? Are you fine on that part? Okay, so go to an actual chart. So that is the chart of A and G. I'm going to use the period of 21 for my RSI indicator. Reason being, we trade for a period of 21 days max in a single month. Right? In a good month where there are no holidays, we trade for a maximum of 21 days. Now, because we trade for a maximum of 21 days, I want, if I'm looking at a daily chart, to see what the trend is over a 21-day period. So if I'm on a 4-hour time frame, it's going to be 4 hours times 21. If I'm on the 1-hour chart, I want to see the trend over a 21-hour period, right? Because if I'm not mistaken, the markets trade for 21 hours as opposed to 24. It's just assumption which, or theory which says that we trade for 24 hours. We don't trade for 24 hours, we trade for 21. Right? Now, from this 21, I'm going to put it on the chart there. This is the chart of Anglo Gold. So what you do is you go to insert, and on insert you'll go to indicators. From indicators you'll go to oscillators. On oscillators there's the relative strength index. I'm going to click on it. And then here where it says parameters, on period I just say 21. Now I want my indicator to give me data on the basis of the closing of an activity as opposed to the opening of the activity, right? So with candlestick, there's a closing price, there's an opening price, there's the highest price, there's the lowest price. So I want my data to be given to me in terms of the ending of the activity so that I can see the average after the market has went in and prices moved. I don't want to see the average once the market comes in because I don't know whether at the end of the period they're going to be selling or buying. Right? Now, it's going to be closing. Here where it says levels here, you see they have 30 and then they have 70. Now, because I need the 50, the 60, and the 40, I'm just gonna come and edit here. I'll add 50. I'll click add again. I'll add 60. I'll click add again, and then I'll add 40. So, and I say, okay, so there's my indicator with all the lines. So I have a 70 line, I have a 30 line, I have 60, I have 50, and then I have 40, right? So if I'm looking at A and G, well, you're looking at something that I took a position on. I went short on. I went short from this point here, my stop loss was there, right? I went short. And the profit that I'm making is 3161. That's the profit. But it's not just one position, it's 3 different positions. So why did I decide that I wanted to go short on this trade there? If you look at the RSI, do you see that the RSI here went below 40? This is the 40-point line. Do you see that the RSI went below 40? So the RSI here, by going below 40, told me that the market has generated a selling interest on this share. Do you understand? Because it goes below 40, there is selling interest in this share. Now, because there's selling interest in this share, if I was initially buying this share, I need to now do away with the buying. I need to focus on the selling part. Meaning, do you see they change direction by going up? This is support, that's one. I'm waiting for a resistance, right? So there they went above 50, but never went above 60. So there's no buying interest. That means the market is not moving sideways here. It's actually trending on the downside. And then from there, they started coming down. Notice how the indicator now is going below 40, right? Now, in the market, the biggest mistake that a lot of traders are going to be making is this. A lot of traders are going to draw a line there. This. A lot of people are going to draw a line like that. And when they draw a line like that, they'll say, this was support in the past. This was support in the past. This is still support now. That's what a lot of traders are going to do. But now they are wrong. Why? Because the moment we came here, even though we created support here,
The indicator showed us that the numbers are selling this share, they are not buying this share. So rather wait for them to create support, wait for them to create resistance, and notice that this resistance is lower than that one. Do you see that? That means that they are likely going to create a support which is lower than this one. Hence the selling interest there. You are a seller on this trade, you're not a buyer. You're done. Any questions? Yes.
I would like to ask, I'm a seller at which point? The current one or?
We were supposed to be sellers at a higher point. Remember, by this being generated as support, we are only waiting for a resistance, right? Because remember, this support comes from a downward move. So already I have a resistance there. I have a support here. This was a retracement there. Do you follow that part? And yeah, a seller.
But I think I want to write this question. When do I, when do I enter?
You can always enter the moment the indicator goes below 4.
So when
Below
it is
50.
now, I can't, am I late?
No, now you're already late. The reason why you are late is because, do you see where I've entered? And you don't know out of how many quantities I used to enter into the position, right? So if I used a lot of quantities to enter into a position and you decide to go in for a short now, if I decide I want to take a profit, then it's going to change direction. So you're already late. Plus, I mean, a move from, let's say, 190 to a move at 182, and you're only entering here, don't forget that there's someone that entered there. And if they go out, they can influence your position. So at that current stage, you're already late. So at this current stage, because you have a resistance, you need to wait for a support. From a support, you need to wait for a retracement, and then you can enter into the trade.
Another one. Why didn't you enter earlier when the price came up there? Why specifically?
I saw it late.
You
Yeah, I saw the trade. Yeah, it had already moved. But ideally, I would have entered somewhere around there. Yes. But because I saw it late, it was still early for me. Yeah, it wasn't that late. But here now, it's already late. You can't engage. Yes.
Plus, if I entered into the buying stage with it below 40, went up a bit up to 50, and then I sold at that point.
Yes.
So still the case.
Yes. But remember, this movement here can present itself in two ways. It can either be a sideways movement or it can be movement against. So the issue is we never know exactly whether it's going to be movement against or a sideways movement. So during a retracement, you'd rather stay away from a retracement and then enter into the next cycle of the trend. That one is going to be much more profitable. The other one is a 50-50. They may give me a movement against or a sideways movement. You don't know which one is going to be present.
Last question. Retracement. How would you define retracement?
Can I decline answering a stupid question? We'll just take it as a question. A retracement is a profit-taking scenario in the market. So if I'm a seller, the only way I can make a profit is if I become a buyer. If I'm a buyer, the only way I can make a profit is if I become a seller. Yeah. So here, because the initial direction was selling, the profit-taking scenario had to be buying. But this buying, remember, it can be present in two forms, sideways or movement against. This was movement against. But ideally, on this move here, you see this move here? This move here, notice the indicator never went below 40. You would have bought at 40 because the indicator never went below 40, which is selling interest zone. Okay, I'll go to another share. Ballowell. This is another position that I'm in.
I entered there, it's currently there, which is again another profit. So notice that Barlow has been going up there. This is a 4-hour time frame. You see that it was going up there. You see from it going up, the indicator has never went below 40. That means this is a trade where you only buy. You buy around 50 or 40, right? The reason why I sold was because the market hit this place 4 different times, but notice that the indicator was coming down while they were busy hitting the same place. That's the reason why I entered for a sell, because that is a reversal of direction. It's a signal showing you that the market is actually reversing from going up. They are likely going to take a break and start coming down. That's the reason why I sold them. But would you sell it? Would you sell it? With what you know so far? Why not? You think?
Because it didn't go below 40.
It hasn't went below 40, right? So you're not a seller. You become a buyer in this instance.
What if it goes sideways?
If it goes sideways, it can still go sideways. But that sideways movement, so long as the indicator doesn't go below 40, we haven't started selling as yet. We are still buyers.
So I can make profit, right? Even if it goes sideways.
It depends how big your range is. Yeah. If it's a big enough range, you can make money out of it. Another share, TFG. Let's see. There it is. The downward movement of TFG, we ended up around slightly below 30 here, and then went up. Now we are above 60. Agreed. So above 60, buying interest. Agreed. So from the buying interest, what we have now, we only have support, we don't have resistance as yet. Would you agree? We only have support, we don't have resistance of this upward movement. Right? Right? Now, a lot of traders in the market would draw a line there and say that that is resistance. That is false. It's not resistance. For us, we want to see the resistance, meaning once it starts coming down, that means this will go either to 50 or 40, and then we buy again. So long as it doesn't go below 40, we become buyers. In this case, it's still going up. That means resistance has not yet been established for us to start concluding that we are in an upward trend. So we need support, we need resistance, we need retracement, and then we can engage on the next wave. Yes.
Why can't you use these supports that you have in there?
The issue is with the previous support.
Yeah.
That is something that was necessary to be created then, right? But the then resistance, because a lot of people analyze the market from the past perspective, because now we are there, a lot of people are actually selling this share. They are taking positions of a sell. You take a position for a sell there, you are obviously going to put your stop loss above, right? When you put your stop loss above, the indicator is saying we have just generated buying interest. And it's not saying anything about that area there being a level of resistance. That's why. So the resistance from the past can easily be a trick to get you to take the wrong position. This is why if I analyze it, I'm not analyzing it from the perspective of what went on there. I'm analyzing it from the perspective of what's happening here. Do I have indeed a resistance there by being below 60?
from selling, or from where I am, there's buying interest. If there's buying interest, that place is likely not resistant anymore. But for the short traders that are going to be taking the short, we are going to take them out and then still retrace and then continue going out. The trade.
I hear you, but my issue now is I take a trade like after those big candles, I go up, and we agree there's no resistance as yet.
Yes.
Now there comes the news. Isn't it possible that I can be wiped out if the news come out and I'm still holding on to this trade if I don't come out where I thought was resistance?
But remember, you can take your profit there, it's not a big problem. But remember, when news are coming out, you don't know which direction we're going to take, right? You want to be safe. If you want to be safe, then you'll take your profit there at previous resistance. That's where you'll take your profit if you want to be safe. But if you don't want to be safe or you're not a safe trader, you let the trade continue running. Because remember, at previous resistance, we may not change direction. That would be TFG. Yes.
I wanted to ask now, at this current position, one would enter as what? As a buyer, or you are late?
At this current position, you would not do anything.
You are late.
You are late. Yes.
Wait, no, sorry. Why are you saying that it's about 60% against the buy? There's no resistance that's been faced.
But you don't have a resistance, you don't have a retracement as yet. So you don't have enough information to conclude that a new trend is starting. Yes.
Still a question. I know this is gonna take you back, man. I just want you to explain to me what support, resistance, and retracement mean. Sorry that I came in a little bit late. I'm struggling to follow up.
Support is an area at lower prices where there's a possibility of a change in direction.
Okay.
Resistance is an area at higher prices where there's a possibility of a change in direction. And then a retracement is a profit-taking scenario on the basis of the action that you took, either buy or sell. Yeah. Yeah.
How far back do you go to determine which is support level?
I don't look at the past.
Here.
Yeah.
But you start somewhere. You start somewhere.
This is where I start. This is where the market is right now. That's where I start. From where the market is, when I'm looking at the indicator, I'm trying to find out whether we are generating buying interest from where we are or not. That's where I start.
Days?
No. From where we are now. I analyze the market by making an assumption that all of this does not exist and are only sitting with information of where we are now. That's how I interpret the market, or that's how I analyze the market.
The reason why I'm asking
On any time frame.
The reason why I'm asking the question, you kept on referring on the previous one that the line did not go below the 40% mark, which was far back.
That was on the other.
Yeah, on the other.
Yeah, on the other one.
Which was far back. So you were considering that.
No, I was making on the basis of an assumption that the future is not present. Assuming that this does not exist, and this is where we are now, right? If this is where we are now, I'll take from where we are, notice that we are at 40. We are not below 40. This is a point where I'm supposed to buy. And this movement here is supposed to be a profit to you, right? Now, assuming that we are here now, agree? So far from what we have a resistance, would you agree? And the indicator was below 60. We agree on that part. But now, before I can engage, number one, I need to get support. I need to get retracement. Then I engage. Do you understand? So now, because we're already halfway of the movement coming down, I would not want to engage because that can easily be support for the market, or the market can easily continue coming down up until they establish a new support. So analysis starts from where we are now and whether from our current position we are generating buying interest or selling interest. Analysis does not start from the past. What happened in the past stays in the past.
What if past is to repeat itself? I know with trade sometimes whatever happened 2 months ago can happen following week.
But it's not similar to what happened last week.
But if you looked at the TFG, right? Do you mind going on to the TFG?
Okay. Yes.
I'm gonna presume that my resistance is 70, because if you look at data of 19th of February till now, it has never went above 70.
Okay.
So I'll presume that's my resistance.
Okay.
Then that's a good way. As soon as it starts hitting, because it's keep hitting somewhere, it's never gone above 70.
Yes.
It's kept 70.
Yes.
Below 70. It's kept below 30. So
Yes.
it's never going below that mark.
So you would take a shot.
I'll take a short.
You would take a shot.
Yeah.
Even though there's buying interest.
It's a buying interest, but I know it's my resistance.
No, I agree. You would take a shot even though there's buying interest.
I'll take a shot, yeah.
So you are going against what is happening. We are buying the share, you want to sell the share.
Because in the past, the interest rates. it will go down.
Yeah.
Yeah.
But after how long?
Whatever happened here is none of your business anymore. Your business is here. Right? This is why I said when she was raising, taking a profit or going out of the position, I said you would only use this area here as a point of reference to say, I want to take my profit there. Because it may be resistance, it may not be resistance now. In the past it was, hence we can see it. But now, because of the buying interest, it's not resistance anymore. But one thing for sure, we are going to get traders thinking the very same way as you, and they will take the shot.
Can I ask a question?
Yes.
That was on the 5th of February.
Yes.
What happened till yesterday?
What do you mean?
I want to see if that line crossed 70%.
No, it hasn't crossed 70 as yet. From this point, it hasn't crossed 70 yet. We are just generating buying interest right now. That means from the buying interest, we start a new trend from generating buying interest. Or we create a sideways movement.
I think what you want to understand, which I'm also interested in, is what has happened. Let's look at the 30-minute chart. And
So you want to look at a different time
and,
frame.
and how it has moved. Because now we
Okay.
can't see the hit.
I'll go to the 1 hour time frame. There's the 1 hour time frame. In the 1 hour time frame, they still buy. Your 5th is here, right? Your 5th is here, right? In a movement that looked like resistance. Would you agree? But notice how they broke through the level of resistance because of buying interest.
Yeah. No, that's what I wanted to see because
Yes.
that's one was, and I mean, it was not showing us 11 of the interest this week.
Yes.
I wanted to see how it behaved from the 5th to
Yeah. That is how it behaved.
which was still going up.
Yes. So on a shorter time frame, we are buying the share, we're not selling the share. Yes.
Okay, just for the sake of learning, are we going to call this a double bottom reversal?
Yeah, that's a double bottom. They hit the same place twice, but when they hit the same place twice, the indicator noticed it was going up. So them hitting the same place twice and the indicator going up was technically telling you that this was going to happen. They are actually buying. That is the cheapest price where they're establishing support.
Stupid question again. Why would that?
I'm not answering stupid questions.
Why would that line behave different from the indicators above?
What do you mean?
Because you know double bottom, but it's not showing double bottom.
Oh, here. Remember, this line here is analyzing the numbers which are coming into the market. Right? So, yes, the market is trading along or around the same place. But by the indicator going up, the market, that indicator is telling you that the numbers which are coming into the market around this place are actually buying. They're not selling. Hence, the indicators are rising as opposed to falling. So technically in the market, I can decide that I only want to trade scenarios of this nature alone. Anything else I'm not interested in, but whatever that I see that looks like this, and the market is trading around the same place, that's a trade for me. And you guys would call it a strategy.
So in other words, that line below has got nothing to do with the price.
No, it has nothing to do with the price. It has everything to do with the contracts which are being bought and sold. Yes. And then on a currency pair, you'd still see the same thing. I'll pick Euro USD here. So if you go to a currency pair for an instant, this is Euro USD. Notice that it's going up. Do you see this small portion of buying interest here? This small portion here, we buy this, we don't sell this. It's a buy. That small buying interest that was generated there is technically telling us that the euro is going to strengthen against the dollar for a foreseeable future. So meaning you start counting from support, resistance, retracement, and then you buy. Support, resistance, retracement, and then you buy. Up until selling interest is generated. Then you become a seller there. And if you are to look at the past of the very same thing, notice on this downward movement here, ever since the generation of this selling interest, you see the indicators always remain below. That's why. So the indicator is always supposed to remain below 60 coming down so long as the selling interest and the indicator goes oversold. But once it goes above 60 and there's buying interest, the price here will continue going up. You are a buyer in that movement. You count support, resistance, retracement, you buy. If it's selling, you count resistance, support, retracement going up, and then you are a seller. It happens everywhere in anything that you trade. When we take a 15-minute break, I'll come back with Bollinger Bands. Okay, so that is one part, which is the RSI. Now, yes, buying interest on the euro dollar there, buying interest. But if the retrace coming down, you need to wait for it to come either to 50 or 40, and then you can engage in that upward. Yeah. So for now, we just need to wait for them to create resistance. From resistance, we need to see the retracement. From the retracement, then we buy. Yeah, that's all. So now the next indicator, which is the Bollinger Band, it's going to be analyzing numbers in terms of the price action which is taking place there, right?
So it's gonna give us a rough picture of where or buying which is taking place, selling which is taking place, as well as the retracement, where we would expect the retracement to end, right? So now the indicator, we put the period of 20 and 2, gain an average of 21 days in a single month. Now, this indicator is or has 3 lines to it, right? The indicator Bollinger Bands has 3 lines. Now, from the 3 lines of the indicator, that is where from the 3 lines we need to establish whether we get buying interest or whether we get selling interest. So those 3 lines, like this, right? And they have names as well. I'll start with the line that is in between and then finish off with the lines at the top and at the bottom. The line that is in between is a moving average, which solely deals with telling us what the trend is, right? Is the trend an upward trend? Is the trend a downward trend? Or is the trend sideways? So in an upward trend, you would see that when price is going up in an upward trend, this line will be moving below price. That's when we have an upward trend. So price is busy going higher and higher, and this line is trading below that price there. And then in a downward trend, this line will be above price because price is coming down. And in a sideways movement, your price will be going above and below this line here. So this line will be moving in between price itself. So, and this line again is a line that we use as a point of entry to either buy or sell. So your retracement, when you are using Bollinger Bands, ends at the moving average where you are supposed to engage. Do you follow on that part? Do you follow on that part? The middle line of the Bollinger Bands, which is the moving average, it tells us what the trend of price is. At the very same time, we use that line as a point of entry in the market. Agree. We are not neglecting what the RSI is saying as well. We are also going to include what the RSI is saying. Now, the 2 lines, one above and one below, these are known as volatility bands, right? So now, remember in an upward trend, for an upward trend to be what it is, we need to have resistances which are higher and supports which are higher as well, right? And then in a downward trend, we need to have supports which are lower and resistances which are lower as well. Agree? Now, these volatility bands are going to be a signal to us to show us whether the bias of the market in terms of how price is moving, is the market selling or is the market buying? Meaning, we are going to focus more on this. That means from a point of analysis, when I have Bollinger Bands and I'm looking at where we are now, I want to see whether right now from where we are we generating a signal of a buy? Are we generating a signal of a sell like we've just done right now with the RSI? To see whether from the point where we are we in a buying interest zone or are we in a selling interest zone? The same thing that we are going to be doing with this Bollinger Band. So with the volatility band, that is the prepare section. Prepare yourself for a buy, prepare yourself for a sell before engaging in the market. Because we only engage once a retracement is there, not when the retracement is not there. So start with the buying signal. The buying signal of the Bollinger Bands requires 2 lines of the 3 that we have. One is going to be the middle one, which is the moving average. Another one is going to be the top one, which is the upper volatility band. Now, what takes place? Price will move from somewhere inside the Bollinger Bands
When price goes up, it will be moving outside the upper band now. When price starts moving outside the upper band, that would be your prepare buy signal. You are not a buyer there. You prepare yourself for a buy. Why? Because from this movement, we only have support. We need to first establish resistance, right? And from the establishment of resistance, we need to retrace, profit taking. When we are retracing, your point of engagement is at the moving average for a buy. That's a buying signal. That picture still looks like the trend picture, right? The one that we started with, right? The same thing happens here when you're looking at Bollinger Bands. That's a buying signal. It starts first, point number one. It moves from in the middle of the Bollinger Bands. Point number two, price will be moving outside the Bollinger Bands. And point number three, where you are supposed to engage, price goes inside, you engage at the moving average for a long. That's one. Sell signal. Sell signal, we need two of the three lines that are there on the Bollinger Bands. The middle one and the lower volatility band. So what takes place? Price point number one moves from inside, price will come down. Point number two, price will be moving outside the lower volatility band. That would be a prepare yourself for a sell signal. But where do you sell? You have to sell at the moving average when a retracement is taking place. So from a prepare sell signal, price will move back inside at the moving average. That's where you enter the market for a sell. Any question? No question. So can I put the Bollinger Bands there? Yes. I'll put the Bollinger Bands there. Not a problem. Again, inside come to indicators. There where it says trend, just pick Bollinger Bands, there they are. And then 20 and 2, let's leave the color as yellow. So everyone can see, right? So we have the top line, we have the bottom line, we have the middle line. So the upper volatility band is the top yellow line, the lower volatility band is the bottom yellow line, and the moving average is the one that is in between. So because we said the Euro USD is generating buying interest from the RSI indicator, that one you agree, right? Because the line went above 60. When we look at the Bollinger Bands, did price ever move outside the upper band?
Yes.
Did price go outside the upper band?
Yes.
It did. This small portion here, right?
Yeah.
Price went outside, right? So this is a prepare buy signal. This is buying interest. Where do we buy? We buy at the moving average, which is the middle line. This indicator would be somewhere around 50. We engage, buy. That's it.
So once the price, if you don't mind whether the candle is red,
You can wait for the candle to close.
you
Yeah.
can
Yes. Sometimes price, do you see this point here? You see we generated buying interest there. And then we came down. Do you see that this candle went below the moving average and then the next candle went above? This is why I say at the moving average, that's where you engage. Because something of this nature is going to take place. The very same thing here. It went below and then immediately went above. You are supposed to engage at the moving average. That's buying interest. Let's look at something else. Let's go back to TFG. There's TFG. Do we have buying interest? We have buying interest on the RSI, agree? We have buying interest on the Bollinger Band. We do. Okay, so you're a buyer. You just need to wait for a retracement back to the moving average and then buy. Yes.
So let's say the band was a downtrend, and then all of a sudden a green candle is in the middle.
What do you mean?
Like the way it is, you see this downtrend,
Yes, yes.
and the red candle going in. That's you can buy that immediately.
No. This is selling interest here.
I'm saying after that green candle has gone through the moving average. You can
This
buy
one here.
Nah, well, yeah.
This one here.
Yeah, can be black.
No. You can't buy because you don't have a buying signal on the Bollinger. You have to wait for the signal. So ideally, this was the signal here. You're supposed to have bought when we got to the moving average there. This whole move is supposed to be a profit to you. And from this whole move being a profit, now that we went outside, we have another buying interest. We're just waiting for the share we're waiting for the retracement. Then from the retracement, we engage again at the moving average because even here we also have buying interest. So this is not a sell. So it's a strictly buy share. Yes.
Okay, if I would have bought at this point here, like the bottom of those.
This one here. Yes.
This one, yes.
Yeah.
Will it be a guesswork? Not a.
Yes, it would be a guesswork.
A guesswork.
Yes. Unless you're using something else. Yeah. Like a reversal. Yeah. Do you follow on that part? Let's go to A and G. Let's see whether I should hold the trade on Monday or not. So, on A and G, notice there was buying interest here on the Bollinger Band, but there was never buying interest on the RSI. Do you see that?
Yes.
This was mainly created to get those that will interpret this buying interest as a position taking trade. They would have bought there continuously coming down. So they trick those that are using Bollinger Bands, but the RSI was confirming for us that there's no buying interest there.
So which one takes precedence then?
Both. Because something can happen here and not happen there. But I trust this one. I trust the RSI more. So my anticipation is, come Monday, they're going to generate a selling interest on A and G. That's when they start generating selling interest on A and G, that's when you would wait for a retracement back to the moving average and then engage on the next cycle of the sell. But for now, you're already late. Something else that you want to look at?
Can you look at currency?
Which one?
Can you say euro and the pound?
Euro GBP. Bollinger Bands. Do you have buying interest or selling interest? Buying interest or selling interest?
Buying.
It's buy. Can I buy now or wait?
Buy, but it's changed, so you can still buy. But
Can I buy now or wait?
Wait.
You can buy now because you are at the moving average right now.
I can buy now, right?
Yes.
Thank you. I can buy now when I'm using Bollinger Bands. Price went outside. They are now at the moving average. We are supposed to be buyers. Question is the RSI going to confirm what the Bollingers is showing us? Let's see. So on the RSI, we don't have buying. Oh, we do buying interest when we were going out. Now we are bouncing on 50, which is where the moving average is. We buy. Yes.
Isn't that the top market? I once heard that should avoid such.
No, this one is not choppy.
It's not.
Yeah. Remember, you are looking at this picture like this, right? I'm looking at this picture from the point where we are. A lot of traders in the market analyze the market in terms of the past. We don't. If you want to be profitable, we don't analyze the market from the past. We analyze the market from the present. From where we are now, are we buying or are we selling so that I can engage the market? But from the past, you'll get arguments such as, I need to wait. If it does change direction, if not. So you start to confuse yourself. But from where we are at the moving average after producing a signal on the Bollinger Bands. This is where I'm supposed to buy. At the very same time, when this signal was fired up, we were generating buying interest. We did go at 50. Now we are trading above 50. That means we are going back. So we buy. If I'm a long-term trader, that point is of importance to me, yes. Nothing in the past is important anymore. It has already passed. If it's a long-term trade, it depends. A long-term trade is only determined by the time frame that you are using. No, it's the time frame, not a period of a year. Time frame. If I'm looking at a one-day chart, a trade that I take from a daily perspective is going to take longer to reach target as opposed to a trade that I take looking at a 15-minute time frame. Yes.
If you add MACD here,
what do you want to see from the MACD?
The thing is, last time I was convinced that it is the thing to use.
No, not necessarily.
Not necessarily.
It works the same way.
So you say MACD is more use it?
No, I'm not saying you mustn't use it. No, I'm not saying you mustn't use it.
That's what will go wrong.
No, nothing will go wrong. Let me put. Let's see if it does appear. Any question while we're still waiting on the MACD? There. MACD says bullish, currently retracing. When it crosses going up, then you are buy. Yes. Yes.
I would like to ask on the RSI, if the share is overbought or oversold, is it an indication that it will soon move the opposite direction? Or you
No, if it's overbought, it's telling you that the market is buying that share. If it's oversold, it's telling you that the market is selling that share.
So when do you enter? Let me say it's something.
You only enter at 50, 40, or 30, or 60.
You don't enter at 30.
No. You don't enter here, you don't enter there. Just like in the Bollinger Bands, you don't enter when it's moving outside. You need to wait for a retracement first to take place and then you engage the market.
I thought when it's oversold and it's here at 30, you kind of say, surely it will soon come up and then you get there.
Theoretically, that is the assumption. But in reality, the assumption is completely different. So, Euro GBP buy, AUD USD, and please, they are not trade ideas. I don't give out trade ideas. I'll start this one with the relative strength index. So this is Euro, this is AUD USD on the 1 hour time frame. Do you see it went up? Do you see it went up? do you realize that this move here is the one that took out stop losses of those that went short? And those that went short went in because of this resistance here. Yes? No? When this was busy going up, this is what most of you are going to do. You're going to draw a line like that. The moment you draw a line like that, and the market approaches this line, you are likely going to take a short position. When you take a short position, this is what the market is going to do, because everyone sees this area as an area of resistance for them to take a short. But no one sees that at this point here, when we reach this point, RSI is saying buying interest. So why are you selling? This is why I'm saying I don't analyze the market from the past. This is no longer important. What's important is where we are now. From where we are, is the action that has been taken a buy, or is the action that has been taken a sell? The past is the past. Whatever happened there, it's their business. It's no longer my business. Right? So since the RSI is already saying that there's buying interest currently retracing, question is, what is the Bollinger Bands saying? Because the Bollinger Bands is going to show us our point of entry, where we are supposed to enter for a long on this one. Notice the Bollinger Bands as buying signal. Price was moving outside. Do you see that? Now we are retracing. So where's your point of engagement? Do you see where the moving average is? This is your point of engagement for a buy. So when we get to the moving average, your RSI indicator will either be around 50 or will be around 40. That's where you engage.
When you are in class,
So this is
No, it's not a trade. It's just an analysis.
can you come up with your own very ideas?
Yes. No, it's not. Yes.
I want to understand now. You said my point of entry is that moving average. Then when it gets there, do I enter when it hits the moving average, or do I enter when it shows that it's going there?
So I can say, while it's still coming down, don't do anything. When it starts going back up, then you can enter. Yeah. So long as it's slightly, so long as it's above the moving average, then you can engage for a buy.
So what are the chances of it moving downwards between after it's a moving average goes down?
There are chances, can still go below the moving average, but so long as your RSI is not generating selling interest, you can still buy it, even cheap. So long as you don't have selling interest on the RSI, it's still a buy.
So definitely you need to look at the RSI.
No. I'm saying you need to look at both. You need to look at both. Remember, we are analyzing you are expecting this place. Agree. You are expecting this place. So we are busy coming down. Agree.
So
Because we are still, you cannot sell while the market just told you that they are buying. You wait, because all that we have here is support, is the resistance. We are waiting for the retracement to finish. And on the RSI, the retracement can only finish once we are either at 50 or at 40. So now we can only reach 40. Let's say for us, the only way we can reach 40 is for price to go below the moving average. And then we reach 40, not going below 40, and then we reach 40. When we reach 40, we start going up. Now price moves from below the moving average, it goes back above the moving average, even high.
Like what if I sell and then I place my stop?
It's your risk.
Average, and then I buy from that going up.
It's your risk. Remember what I cautioned against a retracement. A retracement, you don't know the nature of it. You don't know whether it's going to be moving sideways on the retracement or whether it's going to be movement in the opposite direction to the action that was taken before. So because of those two, the trade that you take on the basis of a retracement is a risk. You will win some, you will lose some. But me, I deal with 10 out of 10. Either I make money or I don't trade. Not a 50-50 trade. That's too much of a risk. Right? So, are you getting what's going on here?
Yeah.
Another share of your choice? GBP, JPY. So this is GBP, JPY here. But you see that it's going up. It's going up, right? But now because it's going up, now it's coming down. This is where we are now. So from where we are now, what I want to know is, are we buying or are we selling? I'm not interested with what has been happening here. This is none of my business because I didn't make money out of it. My interest is here now. From where we are we buying or are we selling? That's where you start an analysis. Now, I'm going to put the Bollinger Bands first. Notice the Bollinger Bands are saying we have a buying signal. Would you agree?
Yes.
And from the buying signal, the Bollinger Bands are telling me that I'm supposed to engage now. Agree? But now, our point of engagement will still be telling us that price is coming down. Agree? So would you engage now, if I may ask?
No.
You would not, right? Because we don't know come Monday, are we still going to be coming down or going up? But what I have here is I'm supposed to be buying this and not selling. That's what I have. So because I already know that I'm buying, let's see what the RSI is saying. The RSI, do you see the RSI still coming down? So the RSI is still approaching either 50 or 40. So while we go towards 50, price can easily go below the moving average. And then when we reach 50, we start to change movement. When we start changing the movement, you're a buyer on this one. Because everything says buy, nothing says sell. You don't want to go against what is happening. Plus it went overboard. That means a new trend. So GBP, JPY, please don't sell it. It's not a trade idea. Right? It's just an analysis. It's a buy.
So when we don't do support and resistance and trend lines.
No, I want to see support. I want to see resistance now. I don't want to assume support and resistance from the past. The reason why it kept on going higher there to take out the stop losses is because in the market, this is what people did. They drew a line there, some drew a line there, some drew a line there. I can tell you one thing. The reason why they kept on going is because I got shots here that had stop losses there. I had to hit them. When I get to this level, I get more shots there with stop losses going up there. We go up. I get at another shot here, I go high and then I retrace. The reason why we are retracing here is because we've taken out sellers from this point, even this point. Why? Because of these lines.
So stop loss.
No, I'm not saying don't put a stop loss. Not saying don't put a stop loss. I'm just highlighting to you what created this movement in the first place. It's because of these lines, because everyone in the market had already drawn these lines. They were basing their analysis to take a short on the basis of this line. But what they are not taking into account is this line is from the past, it's not from the present. What's happening on the present? Notice when we were somewhere around here, do you see that the RSI went above 60? Thank you. So we were still here before this resistance. The RSI was already telling us that there's buying interest, meaning we are buying this market. But people, because they have these lines and they trust the lines, they were already going short. So we go up.
Is it what you were talking about yesterday when you said we should know if the bus is going to job and even if its direction is still Pretoria?
Yes. The direction is going to Pretoria, but you should know the bus before it goes to Joburg that it's going to Joburg. Yes.
So can we use the lines for working out our take profit areas and
Yes.
stop loss?
Yes. So I can use the past. If I use the past, I'll be using the past for take profit level. That's all. But I'm not going to use it to analyze and say this is where my point of action is going to be. That's wrong. You're likely going to lose from that as opposed to make. Yes.
If we were practical, if you had to take profit there, where would you?
Number one, if I'm, let's say, just roughly, this is buying interest, I engage here, right? When I engage here, this line is going to be my TP. If I re-enter again on the moving average, the next line is my TP, buying signal there. We come down to the levels of the moving average, I buy again, my next TP is this next blue line there. So whilst others are drawing these lines to engage in a short positions, I'm drawing these lines for me to take profit there. Because I'm a buyer, not a seller. Something else? Something else? Share currency pair. Which one? Yo.
No, I'm just
Do you trade USD ZAR?
no, I don't.
Why? Why?
Somebody said I should.
That's USD ZAR then. Let's see Bollinger Bands. Buying interest, right? We generated buying interest there. You're supposed to have engaged around the moving average profit. But from buying interest, they came down. So now, by them coming down, we want to find out whether we have selling interest or not. That's where the RSI comes in. The RSI says no selling interest, just buying interest. So we buy this. Yes, no? From buying interest here, which was this prepared buy signal here, you see we are below the moving average. But here we are still above 40. So it's still buying interest. It's not selling interest as yet. So we buy USD ZAR. It doesn't become into a sell. So Monday, they can decide to be above the moving average. That means as of Monday, you buy from the moving average going high. So obviously, the nature of this, what people are doing in the market, people are going to take a short position because do you see this point here? Do you see this point there? The reason why they came out or they went up with this big candle here is because when we came here, do you see there was buying signal on the Bollinger Band? And they stopped at the line. People took a short position here. Why? Because according to the past, that which was support in the past is supposed to turn itself into a resistance, right? So everyone goes short here. When everyone goes short here, you wipe them out with this one candle. Because that is not resistance. We are supposed to buy because we got a signal of a buy according to the Bollinger Band. But now, because we already know that people have lines and they're already going short, when we move for the attack on the stop losses, it has to be one big candle. Forceful liquidation in much more technical terms. I force you out of a position. You don't decide to go out.
Is there a way of knowing how this guys think so that we can?
I'm just explaining it to you. I'm explaining to you how they think. You or a lot of traders in the market want to make this complicated, right? It's not complicated. There's support, there's resistance, there's retracement. You only engage in the market once you have seen those three. And from the point where you want to engage the market, are you going to be engaging the market in a sell side or in a buying side after the creation of support, resistance, and a retracement? So now we have a resistance. This would be a support, right? This is a higher high. This was a support from the past, right? The resistance of this support is this one. And this was the retracement. Notice the retracement was not movement against. Do you see that? This is where the retracement trade is a 50-50. You wait. Moving average, you engage. Buy. There it is. Supposed to, that's a 1 hour candle. So if you entered anywhere here, you wait, what, 2 hours and then you're out. No, you make money in 2 hours. Yeah. One candle here is 1 hour. So now that we have support, we need to generate resistance. Obviously, resistance is going to be high. But what I can tell you is, currently in the market, this is what people did. They have a line there. Do you see that they changed direction right at this resistance? Now, we change direction here, and it's a higher high from the past, right? As we are going up now to generate another signal, you'll get short traders here, and the same scenario is going to happen towards this level there. Because the seller here has a stop loss there. So they are going to use this as a reference to put their stop loss. We're going to take them out. Why? Because we are buying, we are not selling.
So it's not safe to trade.
No, it behaves as normal as everything else. Yeah. Yes.
I need to understand something. That one candle, you would make money for an hour. But if you would remain for more than an hour, then that would really be a loser.
Yes, because they move back down.
Okay.
This is why I say you use the previous resistance as a point of target. From this point here, we're going to pass this point, and end at that point.
This one is more.
No, it's the same. It's the same. The two lines there, what I'm showing you with the two lines is people went short here. That's why. Those that went short here made money. It's not a big problem. But as we are going to be going up, you're going to get another one that is going to go short there. When they go short there, they're going to use this point as a point of stop loss. We're going to end at this point here because we know that by being below these two levels here, everyone is already interpreting this as a resistance 1, resistance 2, and then resistance 3. And at the resistance, that's where people take short positions. So we hit resistance 1, you take a short position, we hit your stop loss. We go to resistance 2. Resistance 2, you take a short, we hit you with a stop loss. We go to resistance 3. By the time we get to resistance 3, and you've already lost money twice going short, at resistance 3, you're going to take a buy and then we go short.
Yeah.
Because at resistance 3, that's where we need to hit, retrace after generating a buying signal, and then continue going high. Another share.
Euro 80.
I don't have Euro AED. I don't have Euro AED.
USD card. A euro, what is it again? Yeah.
USD CAD. This is USD CAD. I'm gonna go to a 4-hour time frame, or maybe let's go to a 1-day time. This is the 1-day time frame of USD CAD. So let's see. What are the Bollinger saying? Bollinger Bands are saying we have a buying signal. Great. So buying signal there, the market has been trading sideways around the moving average. So we need to see whether the RSI agrees with that buying signal there. So if the RSI indicator tells us that sell has just been generated, that means we need to look at selling as opposed to buying this very same thing. So if we look at it, we only had buying interest and we are still in between 40 and 60 there, right? So at any point somewhere around here, we are supposed to buy that from where it is because we have buying interest or a buying signal there, not a sell signal. Plus we have a double bottom reversal / head and shoulders. Here, these two. Bottom, we came back to the same place. You see where we are at this bottom, sell interest, right? Come back to the very same place, but we are higher. That's why they went high and generated a buying signal. So this is a buy. I'll see you on Monday. Thank you. Please fill in the forms that are on the table there.
Can I ask one last question?